Smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh mama myself no do pass like this. So many things inside of my jeans. Slide down DBTs.
Teuri. Pop.
Kasi. Kasi.
Marlon. One, two, check 1, 2. 1, 2, 2, 1, 2. Welcome to the 8th Eastern and Southern African Regional Conference on Inclusive Insurance. This year's theme is driving the inclusive insurance agenda, closing the protection gap. Kwa sawa? Check 1 2 1 2 2 1 2. Mic check 1 2. Niongee na sauti ya juu ama sauti ya chini? Ati? Niseme? Niseme 2 1 2. 2 1 2. Mic check 1 2 2 1 2 2 1 2.
Do you dream of building a home that brings joy, warmth, and a family closer together? Located in Ruiru with over 140 quarter-acre plots available now, go to ushirikagardens.cic.co.ke or SMS HOME to 16111 and WhatsApp 0736 690 101 or call 0711 049 811. A dream worth having. Ushirika Gardens is a project owned by CIC Group. WhatsApp 0736 690 101 or call 0711 049 811. A dream worth having. Ushirika Gardens is a project owned by CIC Group.
two. Yeah.
Tetema. 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 Oh mama. Oh mama. Oh mama. Oh mama. Oh mama tetema. 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 Tetema.
Two. Yeah. Yeah. Two. Yeah. Yeah.
Oh mama tetema. Oh mama tetema.
Two.
Oh mama tetema. Oh mama tetema.
Two.
Oh mama tetema. Oh mama tetema. Oh mama tetema. Oh mama tetema.
Two. Two.
Kisha kimempa. 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 Kisha kimempa.
Two. Two. Yeah. Two. Yeah. 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 Two. Two. Yeah. Two. 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 yeah.
Good morning. A very good morning to all of us. We would like to get started, like in the next 3-4 minutes. So kindly get to your seats, get to know your neighbor, say jambo, the Kenyan style. Yeah, I can see Anne is doing it so well. Thank you. We have our speakers in the house, so they are just joining us, and we get going for this pre-conference. The official opening of this conference is happening in the afternoon as per the program. So for now, we are going to have the pre-conference workshop, session 1. Thank you.
Do you dream of building a home that brings joy, warmth, and a family closer together? Located in Ruiru with over 140 quarter-acre plots available now, go to ushirikagardens.cic.co.ke or SMS home to 16111 and WhatsApp 0736 690 101 or call 0711 049 811. A dream worth having. Ushirika Gardens is a project owned by CIC Group.
Right there, Kibagendi, we can have the sitting Commissioner Karibu Sana. Thank you, ladies and gentlemen. For those who are getting in, kindly if you could do that quickly so that we get started for this pre-conference session. My name is Noela Mutanda from IRA, and I'm going to help in guiding us run through the program. I would like to welcome all of us to this conference, and as we say the Kenyan way, just turn back to the person at your back and say jambo. Jambo should be able to do it, you know? I am sure if it's your first time in Kenya, you must have heard that word. So the next will be telling you when to say asante sana. But for now, jambo does it. As we all know that we are having the official opening of this session, of this conference in the afternoon, and that is still the plan. That's how we are still working. But for now, we would like to have the pre-conference session. At IRA, we say all the time that insurance matters are really, really hard. Very hard indeed. And as we do it on this side of the world, the hard things we take to the Lord in prayer. And so I would like to ask Pastor Abel Matoke to come and pray for us. We are about to discuss really hard things, and you need to take them to the Lord in prayer. Karibu sana, Abel.
Let us bow and pray. Eternal Father, we want to thank you for today. We invite your presence during this session, and that your grace will abound. We commit every facilitator into your hand, the leaders of the program. We pray that your blessing will rest upon this session for the 2.5 days. We thank you and we bless you. In Jesus' name we pray.
Thank you, Abel. For those who want to tweet about this conference, the hashtag is inclusivity, insurance inclusivity, capital I, capital I. We say, again in this part of Africa, that when your guests come to your home, you say hi as many times as you meet them. And so I would like to ask the Commissioner of Insurance, who will be making his remarks in the afternoon, to come and say hi, the first hi of the conference. And then you meet him along again, we'll be expecting more highs from him from today all the way to Thursday. Welcome, Commissioner.
All protocols observed. Good morning. Let me take this opportunity to welcome all of you to this conference. I know it's going to be 3 days of quite interactive sessions on the difficult things that Noel has spoken about. But I hope and very hopeful that you'll be able to discern what will be discussed in the next 2-3 days. And we hope that whatever we will listen here, discuss, would improve access, affordability to insurance in Africa and to the other places that we will reach. So with those few remarks, I think we'll make remarks in the afternoon. Asante sana. And I think now Noela will invite the speakers to come to the front. Thank you very much and wish you the very best in our discussions today.
Thank you, Mr. Kiptum. As I ask Lemi, who is the session facilitator, to come up and to call his panelists, I would just like to acknowledge the presence of some of our sponsors in the house. APA, thank you so much for your sponsorship towards this conference. CIC Group, we are grateful for the sponsorship that came from your way. Britam, asante sana, we are grateful. Old Mutual, we appreciate your support. Africa Re, we also appreciate your support. And of course, Munich Re Foundation, asanteni sana. So let me over to you for you to invite your panelists and you take it over. Karibu.
Good morning, everyone. Okay, I would like to ask my co-facilitator, Anne, to join me. Okay, so thank you, everyone, and welcome to this pre-conference. Excited that we have 3 days to share different topics on this very juicy topic of inclusive insurance. You definitely benefit from learning from how practitioners across Africa are trying to make inclusive insurance work. So without wasting time, I'll invite all the panelists that are present here, and of course we have some panelists that are joining us virtually. I'll invite Andrew to come to the front, Andrew Nkolola from IO, Zambia, and Dr. Nelson Kuria from CIC Group. Joining us virtually is Jarek from Pioneer and Hadil from AXA Egypt. I think you'll get to meet them as we start. So I would like now to ask the technical team to just put our slide deck so that we get started. Okay, perfect. So just a bit of background, and I'll briefly introduce the speakers. Of course, their bios are on the program, but I'll introduce them briefly before we get started. But I wanted to just give you a background of the CEO retreat, which we tag top line and bottom line strategies for inclusive insurance. So I've been privileged to be part of inclusive insurance for over 20 years. And through DEC, Munich Re, have been part of some of the Inception international conferences. And it's been good to see how inclusive insurance has evolved over the years. At the very beginning, we used to have questions like, is it worth it to do inclusive insurance or microinsurance as it was tagged then? And sometimes you'd get numbers going up to say they are not yet sure that inclusive insurance can work. But over the years, we've seen that actually inclusive insurance can work. And the question is no longer can it work, but how can we make it even work better? The reason is simple. If you look at Africa, most of our penetration rates is quite low. Most of the countries contribute 1% to 3% to GDP for insurance, and insurance always lags behind other financial services. So how can we change the story? How can we change the landscape? And this is really the topic that we have. And this morning, we'll actually be listening from practitioners, who have actually done it, who are doing it, and learn from them how they are making it work. So in terms of the panelists, we have Dr. Kuria, Dr. Nelson Kuria. And I met Dr. Kuria a long time ago when Anne here was still working for CIC. It was a privilege to meet him and to see his passion that he had then for inclusive insurance. He's told me something that I still remember today. And he said, I encourage staff to pay all claims as quickly as possible. And I think you all know, what that means when it comes to really living the promise of insurance. And it's a privilege to have Dr. Kuria here to actually share some of that experience in terms of his passion for inclusive insurance. And then on the stage, we have Andrew Nkolola, a colleague, Zambian like me, and really pushing the frontier of digital inclusive insurance in Zambia. Andrew has been in the insurance industry for quite a while. He's worked for a number of insurance companies, but his current portfolio is contributing significantly to the landscape of inclusive insurance in Zambia. IO reached about over 2 million subscribers subscribing to insurance as well. And this morning we'll learn more about what Andrew is doing. And then, of course, we have Pioneer, Jerick, who is joining us from Pioneer Insurance. I think for those who have been in inclusive insurance for a long time, again, would know that Pioneer is one of the leading inclusive insurers in the world. They have developed a model that has been able to extend inclusive insurance to over 21 million Filipinos. And again, it's a privilege to have Jerick to actually learn from them. And finally, but not the least, we have Hadil. Hadil is joining us from AXA Egypt. And again, AXA Egypt has what is termed as emerging markets, and within the AXA group, they have been trying to push inclusive insurance through the emerging consumers or emerging markets theme. So again, it will be a privilege to learn from AXA this morning. So without wasting time, I just want to set the scene. If you can go back to the main deck. Okay. All right. Yeah, so I think I've talked about the objective of the CEO retreat. It's really about demonstrating how inclusive insurance can work through practical experiences from the practitioners. And, okay, you've put the wrong one. This is for the second part. Please put the first one. Sorry about that. We have two decks, and they had to put the one for the second part. So, okay. Whilst they are putting the deck, of course, I need to introduce my co-presenter. My co-presenter is a colleague and associate to my company, and she's one of the directors and founding members of AB Consultants, Anne Kamau, and she's one of your hosts. She's based here. We've worked with Anne and Barbara, her colleague, who are co-founders of AB Consultants for a long time in different markets. So it's a pleasure to actually share some of the insights as well from my experience. Okay, so I take it we have the right slide now. Okay, all right, okay, perfect. Thank you so much. And yeah, so those are our speakers who have done the introduction. We would like to start with the business case this morning, just to set the scene and just try to go back to why do we talk about inclusive insurance. This is one of my favorite slides, and most of you perhaps have seen this in many versions before. It basically talks about where is inclusive insurance when they're talking about inclusive insurance. when you look at the population pyramid, I think in all the countries, there's nowhere where you see this triangle upside down, where you have wealthy people in the majority and then go down and find the poor in the small. So we always start with the wealthy people and go to the middle and then go to the bottom. Microfinance had its space looking at those people that are not so poor, but of course really in that segment where they need to increase their income. And then right at the bottom, we see that they are destitute, and in every society, you always find people who are actually unable to do anything. They receive grants from the government. They are part of social welfare systems. So that's really not really the most viable market, because you still need to move those people to a point where they are able to earn some money. Then as you move into those that are poor and not so poor, but of course economically active, then you can actually find that microfinance and microinsurance finds its place there. But of course, when you look at our markets, we actually realize that there are so many people who are even not so poor, maybe even middle income, who still do not have insurance. And some of them, they have insurance because it's mandatory by their employees. So how do we actually do that? Cover those people as well. So inclusive insurance really talks about all the excluded market segments, or the market segments that are viable but really not taking up insurance. So when we talk about inclusive insurance in this conference, please know that we are looking at all the market segments that are not covered and how can we extend insurance. Of course, we will be looking at MSCs as well, enterprises which are also not really covered by insurance. How are we doing in terms of covering them? I always say inclusive insurance is the blue ocean. I think this is a group of insurers. I think most of you are coming from the insurance industry. You know that the formal sector is very competitive. And all insurers target the same people, the same companies, and sometimes the book just moves from one company to the next. But when you look at inclusive insurance, it opens up the opportunities to this blue ocean, which has so many people that can actually get insurance, but currently not underserved. And that's really what we are going to be focusing on. So I'll now invite Anne to start with Dr. Kuria and start talking about the topic in terms of how can we make it work. So Anne.
Thank you, Lemmy. And good morning, everybody. I have been introduced, and I'm glad to be, co-hosting and co-facilitating this session. Very privileged to be, talking to you, Mr. Kuria. I can tell you for a fact that Mr. Kuria taught me everything I know about inclusive insurance, and I hope I have been a good disciple. Yes, so looking back at where you have been and the journey to actually get the majority of the people in Kenya particularly, and even spreading the gospel, as we say, further abroad to Africa and to other nations where inclusive insurance is key. What could you say is you have encountered that hinders most CEOs from getting into the business because they do not see the business case?
Thank you. Thank you very much. Can you hear me? Yeah, very nice to see all of you. A very good morning to you all. And thank you, Lemmy and Anne. Anne, you are not only a disciple, but an apostle now. You have become better than the teacher. And I am very happy to be here this morning. And I consider it a great honor to have been invited to share my experience in this subject that is very close to my heart and one that I'm very passionate about. And having been actually a pioneer of microinsurance in not only in Kenya, but within the continent, because I played a role as the first chair of the AIO microinsurance working group. It's very interesting when we talk about the business case in inclusive insurance. And the interesting thing is that, like a story is told of the two salesmen who were sent to Africa in the beginning of the 20th century by a shoe manufacturer in Europe. The two came here in Africa. One of them saw millions of people without shoes, and he concluded that because these fellows, millions of them, do not wear shoes, there is no market. The other one saw millions of people who had no shoes and saw a market, and a huge one at that. And what this little story tells us about the entrepreneurial mindset, a transformative mindset that sees opportunities from challenges and sees beyond challenges and sees how even to capitalize on that, on those challenges to grow business. And I want to say it here and now that the reason that we don't see the huge potential that lies within the inclusive insurance market segment is this lack of an entrepreneurial mindset. And it tells us that, like somebody said, that opportunities don't run around looking for people to discover them. They are like buried treasure that will only be discovered by those that are discerning, those that are persistent, and those that are passionate to bring up the hidden treasure. And I want to say that inclusive insurance is a hidden treasure. And it will only be discovered by those that are discerning enough, that are persistent enough, and that build competencies to be able to capitalize on that huge potential. Why don't we see it as a business case? Because of what we call market myopia. Market myopia fails to see opportunities, market opportunities. We are like that first salesman who saw millions of people without shoes and declared that there was no market. But I want to say that inclusive insurance is not for the faint-hearted. It is a difficult business. And as all of us know, opportunities come around dressed in, what do you call them? Overalls. That shows this is hard work. And we need to embrace that aspect of recognizing the fact that it is hard work and we have to labor. We have to invest to be able to turn that huge potential into the real viable business case. The other one is strategic problem that we have a big issue of low penetration in our continent. And we have actually been chasing the same business with a zero-sum game of undercutting into a spiral of lower and lower premiums. So we are the only industry that reduces prices even when inflation is rising, when the cost of doing business is rising, but we cut our prices to the bone and thereby reduce or weaken actually the whole industry that we are in. So if we could see this potential from a strategic point of view, that it is the next frontier of growth, it is also going to be the frontier for enormous disruption. And failure to recognize this potential and the opportunity for disruption will mean, from a strategic point of view, that we will miss the bus. And I want to put it to us that when disruption comes, because it is going to come, I have no doubt about it. What I can't tell you is that whether it is coming tomorrow or the day after. But believe you me, it is coming. And when disruption comes, driven by technology, you know what that means. If you have missed the bus, catching up will be extremely difficult. So if we do not see that potential, see the strategic importance of this huge potential, but work around to come up with innovative business models that will counter those challenges that hinder access, then we will talk about the potential until cows come home. So I wanted to put it to us that there's huge potential, and it is going to happen that this is where disruption will come for those that are discerning, those that are persistent, those that invest in capacity, and those that prepare themselves for that future of disruption.
Wow. Thank you. Thank you, Mr. Kuria. Thank you. So, market myopia, that's one of the things I've gotten. Strategic challenge in that we are not looking into the new market, or we are seeing no market because people don't wear shoes, well, instead of looking at it the other way. And the fact that disruption will come and we either board or we miss the bus. Now, you speak with so much passion. And my question would be, where does this passion come from? Because many of us in Africa, many leaders of your repute, but we have not seen that drive. We have not seen that real, desire to actually drive change. What drives your passion?
And transformation comes from dissatisfaction, acute dissatisfaction with the status quo. When we talk about poverty in our continent, I personally do not look at it from the statistic of living below $2 a day. I look at poverty from its manifestation, how dehumanizing poverty is, how it imprisons people in very, very squalid conditions and conditions that at times do not befit, the life of a human being. That is what makes me unsettled in my heart, that I feel if I have an opportunity to do that which I can do, even to lift one soul from that dehumanization of poverty, I will do it because I'm driven by purpose and greater good. And I subscribe to the philosophy of servant leadership, that I have a position that is a privilege that I have been given by society or my organization. And within that privileged position, I'm a steward of the people that are under me, and even people that are stakeholders by way of being customers and being shareholders. So as a steward, and I recognize my role of stewardship, that I hold this in trust for society, for my organization, and I have to do my very best, utilizing the talents that I have, the competencies that I have, to be able to impact the lives of my fellow citizens. No more, no less. Equally, being a cooperator, for those that have the historical background and philosophical background of cooperatives, cooperatives are organizations of the people, by the people, and for the people. So this is something that fully aligns with my own personal values. That these are organizations that are created by people to empower themselves and to develop with dignity from that those dehumanizing conditions that our people have found themselves in, particularly in this continent. So I always look around and wonder, why is it that we are not that dissatisfied with the status quo? When we see the squalor that our fellow citizens live in, when we hear about flying toilets, dehumanizing conditions, but we are not moved. What kind of leaders are we? Do we even, merit being called leaders if we are not creating and producing change that can transform the lives of those people who are our brothers, our sisters, our fathers, and our fellow citizens? That is the fire in my belly. That is what gives me that passion, that I would like to leave a legacy behind, that I impacted the life of a number of my fellow citizens. And out of what I did, they were lifted from those dehumanizing conditions of poverty. And I have the tool. The tool is insurance, risk management, being able to address the financial shocks that these people are highly vulnerable to. So like Moses, I have the rod. But how have we used the rod? Thank you.
Wow. It's actually contagious. I don't know whether you feel it. The passion is visible. The fire can be felt. And we hope, Andrew, I don't envy you much. You might be catching fire by now, sitting so close to Mr. Kuria. Now, with that, I want us to move to, as we think about that and as we internalize it, we move to another speaker. And I'll come back to you with a few other questions, and perhaps we'll take some questions from the floor, getting to learn from your experience. Thank you.
Thank you so much, Anne. We'll move to Jarek. And Jarek is joining us virtually from the Philippines. So I'll ask the technical team to put back the deck and connect Jarek for his insights.
Okay, thank you, Lemmy. Good morning, everyone. Good
Hi,
afternoon here
Jarek.
from the Philippines. So as we are putting up the deck, I'd like to say a few more things, but as a way of introduction. I'm happy that Mr. Korea actually talked about entrepreneurship as a key component or strategy for any company, group, or individual who wants to do inclusive insurance. That's essentially also is the core of my message now. I would like to share the entrepreneurial things that we've done in Pioneer here in the Philippines. As a caveat, I would like to say not everything might apply to your company, to your market, but I'm hoping that there are a number of things that you're able to pick up from what I'm going to share to you at this point in time. Now, let me give you a bit of a background of what I was or who I was when I got into microinsurance, which now you call inclusive insurance. I was a management trainee working for Pioneer. I was a person who was recruited and developed to learn everything that needs to be learned about insurance because I was earmarked for future leadership roles. And one of the things that I've learned about our industry, our being insurers, is that history and tradition is a key strength or are key strengths to us. In fact, we often remind ourselves that things are done in certain ways, right? And this is how onboarding and training in microinsurance happens as well. So when I was very new in Pioneer, and Pioneer so far is still just the only company I've worked for, I was told that there are certain ways of doing things. In fact, insurance is one of those few industries where the more experienced you become, the more valuable you become in this industry. When we started getting into inclusive insurance, I learned that that key strength of experience and tradition of sticking to what works are actually things that have become the liabilities in terms of doing inclusive insurance. Because of that, I had a lot of people telling me what can and cannot be done. A lot of people were genuinely concerned. They were reminding me that certain things cannot be done in certain ways. People tell me that the market that we were targeting in microinsurance couldn't even pay insurance, couldn't even understand insurance. And they're just too risky. And there's probably no way of reinventing the insurance economics to make it work. As some of you might know, we have numbers to prove that that is not so. I can go on to my next slide. I don't have a slide for this, but I just would like to share with everyone that I was in the role as head of microinsurance in Pioneer Philippines. And when I started in that role, we were looking at $500,000 of premium on my first year. By the way, I wasn't the first champion for microinsurance. There were two people who came ahead of me. So we were looking at $500,000 as premium and 27,000 clients as outreach. Almost a decade after, when I left that role to do something else for my company, I left that business covering about 11 million unique individual lives and 32 million US dollars of premiums. More than those numbers, I'm happy to share that Pioneer Microinsurance has become, in terms of gross premiums written, the second biggest business of the Pioneer Group. And mind you, we have both general and life business. So it's a combined portfolio of the group. So it has become the second biggest business, in fact, bigger than motor. Property is the only one bigger than it. Now, I think if you factor out reinsurance, the effect of reinsurance, I have seen the numbers, but I have a feeling that microinsurance might be the biggest business even in terms of net premiums retained. But more excitedly, microinsurance has become the biggest income contributor for Pioneer. It is not just giving some form of income. It has become the business that contributes the most income to the company. So, is there a business case to doing microinsurance? The answer is yes. one of the very first lessons that we have, and if I can ask, I don't see the slide yet, but I'm not sure if it's
Can
being
you
off.
share this? Can you share the slides? The same
Okay.
deck has the slides.
Okay, okay. Sorry, I don't see it. But anyway, I'll just proceed. Um, the the first lesson that I often share with people when they ask me how to start and where to start is one has to learn to unlearn. Okay. We have to recognize any organization getting into microinsurance has to recognize that microinsurance um, is catering to a totally different market. What cannot work is just doing more of the same and just cutting them into smaller pieces. It can never work that way. I can guarantee you that. Why? Because the organization will get trapped into a lot of conversations and arguments about what can and cannot be done. Okay. Any organization doing inclusive insurance has to recognize that when you when you target this inclusive insurance market segment, the behavior is different, the expectation is different, and therefore it should follow that the products should be different. Now, it may look like the same in surface, from the surface, like it can be your typical property insurance, motor insurance, health insurance, um, life insurance, and accident insurance, right? But the way you execute that product on the other piece of marketing, we have your 5 or 7 piece of marketing, right? The way you distribute, the way you communicate, the way you process claims, those things have to be very, very different. Okay, so that was the recognition of what Pioneer has done. So in my slide, I have a deck that shows
Okay, they have
what worked
Jarek,
and what. Yes, please.
perhaps you can share the slide deck from your end. It's like they're struggling at the back to share the deck. It's the
Okay,
same
okay,
deck.
I'll do that, Lemmy. Okay, give me a minute. I'm sharing this. Oh, it says host disabled participant screen sharing. You may.
Okay, can you allow him to share the deck if you can't share from your end? Sorry about that. I hope we can fix the deck at the back.
I'm checking. Do you see something?
Okay. Yeah. Just put it in slide mode.
Okay, sorry. That was.
It's gone. Try again.
Okay, there you go. I think that's my screen that you are seeing.
Yeah.
Okay.
Are you able to put it in slide mode? Yeah, perfect.
There it is. Thank you. Okay. Now, I want to share that this slide shows some things that work and did not work for us. So very briefly, I'll go through them. Traditionally, as an insurance organization, most organizations focus on products. That's on the right portion. It did not work for us. We had to focus on the customer. So what does that really mean? We've graduated from conversations that actually say, this is how we do this product, right? And went on to ask questions, what does the customer expect from us for this product? So that worked for us. We've also graduated from the idea. We've tested actually distribution through partnerships and one-on-one selling, and we've learned that doing one-on-one selling takes a very long time to build volume, and it becomes very expensive. And as leaders, we want to manage the expense from the very beginning. Now we have a very important lesson on expense here, right? Expense only becomes expensive if the sales do not outgrow it. But if we learned in Pioneer that we can spend and invest on any strategy as long as growth outgrows it, premiums grows it, then there should be no issue. So we've learned. So from one-on-one selling, we actually have learned that distribution through partnerships work. Currently, Pioneer has more than 100 distribution partners. A lot of them are in the microfinance, cooperative, and rural banking space. Now, the other very big discovery is this thought between affordable and cheap. Now, when we went into microinsurance in the Philippines, by the way, we were not the first. The conversation was around the idea of how to make the product cheap, meaning squeezing every value out of it in the name of being cheap, right? We have learned that at a certain point in time, you cannot pull the pricing too low because we also have to survive as an industry, as insurers. All we need to do is make it affordable. And what is impacting affordability? Product design, like how often we'd like to ask them to pay for their premium. When? The question of when is very important because we learned that we have to design products that can be paid at moments when they have money in their pockets. Unlike most people, the poor probably work for the day, right? So, or only get paid at the end of the week. Unlike salaried employees in the Philippines, were paid twice a month. In some other countries, once a month. So, there has to be a recognition that the financial situation of the markets are very different. Now, the last item is what Mr. Korea was talking about, a corporate entrepreneurship. And we've learned that organizational risk-taking and autonomy is very important, not only in inclusive insurance, but all our work done that tries to develop new markets has the best chance at succeeding when we isolate it from the realities and issues of the existing business or organization. Now, a lot of people ask me, but isn't that expensive, Jerry? It would be expensive if we are not careful. So I'm moving on to the next slide. By the way, I just want to say before I move on to the next slide, that the most important value proposition that we have created, and this is also very consistent to what Mr. Korea said, is pay claims fast and fair. This is not only about the economics of the loss ratio where, because a lot of people ask me, but won't that increase your loss ratio? It could potentially be, but let me argue this. If you pay claims fast and fair, your market will allow you to price your product properly. So therefore, your baseline, your denominator in that ratio becomes bigger. And that ratio can in fact become smaller if your denominator becomes bigger. So why? Because people now allow you to price your product a bit higher because they're willing to pay for something that no one else can do. Okay, now the other advantage of paying claims fair and fast is this. And the standard that we have created in Pioneer is pay claims within 5 working days, right? 40% of our claims are paid within 24 hours. About 60% are paid within 48 hours. So that's the standard that we have created. Now, what has really this translated to is that we don't have to spend any marketing expense because of word of mouth. So therefore, what we may theoretically pay more in claims, because our position is as long as a claim is valid and it's not fraud, we pay it and we pay it fast. If there is an instance where there was miscommunication by our agent, by our partner, as long as it's not the client's fault, we pay it because the return is much, much better for us. We, in fact, had this study during the time when I was head of microinsurance, and we have learned that every 1 peso of claim amount that we pay, it comes back as 10 pesos of benefit somewhere else, either as additional premium, additional account, savings here, savings there. So the economics are just so overwhelming in favor of paying claims uh, fast and fair. And this is one of those things that really, really makes people think, because as insurance practitioners, I'm sure a lot of us were paid, we're taught to minimize claims so that the company can earn more. So it doesn't work. We've learned that it doesn't have to be that case in microinsurance. Now, a lot of people ask me, so Jeric, how do you organize? The first thing that we did was we created a totally separate team for microinsurance, right? And we identified someone, it was me, called the microinsurance champion. Now, a lot of organizations have done this, but what a lot have done is actually identify a mid-level uh, officer or supervisor way down in the organizational structure. Now, they have their reasons for doing it. Cost could be a primary reason why they wanted just to do it that way. We have learned that it will not work. I've talked to a lot of organizations who have taken that route, and I have not seen it work. What worked for Pioneer was they took someone senior enough, that was me, who was just one level down from the one who's really championing the case for inclusive insurance, who was Lorenzo, our CEO. Now, why was that important? Because all people within one layer down of the eventual head are actually the people who are driving the key decisions within the company. And in this case, the microinsurance champion is also a change champion. So if I needed to convince people, I had to convince people beside me in the same level as me. So they wouldn't have listened to me if I was way lower in the organizational structure. This was our learning. So something for you to think about. So, and there was an understanding that what we're looking at microinsurance was a change in business model, not a tweak of something that's already there. Okay, that's why we created a separate business unit. One of the more important decisions we did as well is we gave that business unit, that separate business unit within its own P&L. Why? Our P&L in micro before I came in as champion for microinsurance was attached to a bigger business's P&L. And, we all say what gets measured gets done, right? So when it becomes a matter of financials, there will always be someone within that bigger team that will say, let's not do that. It hurts us, right? It will probably hurt our bigger business. So the decision that I proposed, which was accepted, was give microinsurance a chance. Let me take on that risk of failure by giving it its own P&L. And that really worked for us. Now, um, let me show you that there are certain parts. We didn't have to reinvent everything, right? But what we did was we reorganized microinsurance to take on the the customer experience impacting functions. Sorry, the slide was distorted a bit now. Customer experience impacting functions. So anything that has something to do that could result to an increase of trust or a decrease of trust, like claims, like product development, like pricing, underwriting, sales generation, ops, process design, all of these things, even employee engagement, all of these things, I had to convince my boss to to let the microinsurance team own and create for. Why? The answer is agility, the ability to respond right away and not depend on someone else. I'm going so I have not seen everyone in this call, but I'm just going to share with you a lot of the struggles that you may have in your own organization has something to do with other people saying this cannot be done, or other people saying you have to wait because we have other important things to do, or more important deliverables. Now, that really killed our initial attempts in microinsurance. That's why we said, okay, whatever is preventing us from being very agile or creating value or deliver those value, it has to be owned by the team. Okay? Uh, you might be asking me now, Jerick, isn't that expensive? It is expensive, but the more expensive part of this whole thing is failure, right? But we also realize that there are other things that we don't have to reinvent. They're not necessarily directly impacting customer experience, which are the HR part. So we didn't have to do that within the micro team, the finance part, the marketing, office admin, reinsurance, IT, training, actuarial. Training, IT training and actuarial, we have a bit of it in micro so that we can just initiate things, but then not the full part of it, right? But all in all, these kinds of structure, the reason why we have to retain bits of what we do in the mother organization, because we feel that this can be executed well without having to be at the micro part of things, therefore saving that cost without reinventing that cost. Now, what was transferred to micro, it was just all a battle. I mean, all an analysis of P&L, right? By owning these parts in micro, are we able to generate business that outweighs the expense? The answer is yes, because of agility, value creation, and value delivery. Okay, now let me move on. Let me briefly talk about partnerships. I'll be very quick. These slides will be shared to you. Uh, I should say, without partnership, we will not be able to grow this to almost 20 million clients now, or almost 40 million US dollars of business within Pioneer, right? So when we talk to partners, we are very, very mindful of talking about solving a problem that they have, not simply selling a product. What could be a business problem that they have? They might want to be perceived as better than competition, or they want to be able to retain clients, or they want to be able to attract more clients, right? So when we meet with partners, especially the first time, this is always the question: what problem can we solve for you, right? And as you know, the traditional conversation is we have accident insurance, we have health insurance, we have whatever insurance. Can you distribute it to your clients? So that's not the kind of conversations we have. We also learned that partners need to be part of the product and program design. They have to own it. They have to own the standards. They have to own the processes. They have to be, so that we avoid conversations like, we're not part of it. If it fails, it's all the fault of Pioneer, right? In fact, with this arrangement, they are even the first to tell us there's something happening that's impacting negatively, impacting what we have here. Can we sit down? We don't want to lose you as a partner, Pioneer. That works very well. Now, the other thing that's very important is never forget the customer-facing frontliners. In a lot of partnerships conversation, the conversations happen at the top, at the level of key leaderships. Then when these people shake hands, they now implement it, right? But there was never any consultation or conversation with the customer-facing frontliners. We actually go through that. Andrew has seen that in the Philippines, the way we do it, because we feel we've learned that the most important person in this whole relationship are the persons who are facing the customers. They have to be able, they have to buy into what we're doing. That's why answering the question, what's in it for me? I'm not even talking about monetary consideration. I'm talking about being part of whatever problem that we're trying to solve here. We've also learned in Pioneer that the more successful partnerships that we have embedded insurance in their performance metrics and system, right? If they're really serious about inclusive insurance, they have to be able to tell their people part of your performance will reflect this, and that seems to be driving a lot of the success. And I have to share that mandatory or bundled products are easier path to volume. That's not the only path to volume, but if you're looking for the faster, easier path to volume, then that's it. Now, it has an existing challenge. When you mandate or bundle a product into another core product, then part of what needs to be delivered much better is communication, right? Making people understand what got attached. Okay, so that is very, very key. Now, I'd like to stop here. These are things that I want to share. Let me just
Thank you,
share one
Jarek.
more thing as I turn this over to you.
Yeah.
One of the things that we've learned that helps managing cost is hiring young people. Okay, as we know, more senior people in insurance tend to become very expensive, and they tend to be the individuals who often say, "We cannot do this, we cannot do that." I've learned that it cannot work, right? In my case, I did the computations, and I learned that the compensation of 3 or 4 young people, early college graduates, is actually equivalent to the compensation of 1 senior people. And what that means is I have 4 people working versus 1 person working, and that 1 person is telling me a lot of excuses why things cannot be done. In the case of young people, I'm able to tell myself, I will be the one who will teach them how microinsurance or inclusive insurance can be done. And the other benefit of that is it allows me to set up people for succession planning. It gives me a longer runway, right? More people with more experience, if they already get to a certain age bracket, there seems to be a lot of pressure to pay them so much because they have children to feed, right? Children to send to school. Not a lot of problem with a lot of younger people. So those are practicalities that I've discovered on how to manage expenses as well, right? So the ending situation for microinsurance was we had a lot of people, but not necessarily higher manpower costs, who were delivering more numbers and who didn't have enough excuses to say that things cannot be done. So thank you, Lemmy, for the opportunity and for the organizers for inviting me. Happy to take your questions.
Thank you so much, Jarek. We'll definitely pick up on his last insight. I saw a shock shaking, like who do you recruit, So I think we'll pick it up in the next session as well. I'll hand over to Andrew now so that we get some insights on the digital side. And I'll ask the technical team to bring back the first deck again, because that's where Andrew's slides are. But before you put the deck, I'll ask Andrew. We know that just like Dr. Korea said, inclusive insurance is hard work, but when it works, the impact and the benefits to the company is there. For digital insurance, we have seen freemium models, we've seen loyalty models, we've seen embedded model into the core business of mobile network operators. And we've seen some failed partnerships. We've seen some successes. So we want to learn from you how you've leveraged on the evolution of the digital insurance space and what you're doing different to make it work for the shareholders, but also for the clients. So over to you, Andrew.
Thank you, Lemmy. Would you like me to comment on that now, or as I go through?
No,
okay,
go
all right, okay, so thank you, and thank you everybody for the opportunity. It's an interesting question, Lemmy. I would say we are still trying to write down the recipe, for lack of a better phrase. Why do I say that? Because I think there are a number of factors that have impacted our success as IO, and also some of the failures we've experienced fairly early on in our journey, as you probably see in my presentation. But I think the core foundation behind some of the gains we've made, obviously, like you've alluded to, Lemmy, is I think the relationship and participation or collaboration where the actual partners are concerned. As you'll probably see in my presentation again, IO is basically a JV between a telco or mobile network operator and an insurer at a 50-50 kind of engagement in terms of shareholding. That in itself provides, I think, equal and important vested interest in success, which I think has been very crucial in what we're trying to do. It also has its pitfalls because obviously from a shareholder perspective, and I hope none of them are here, but forgive me for being candid, there are obviously varying interests that sometimes can be in conflict. But nonetheless, I think the general agreement or principle around the collaboration is success. And I think that's a very, very important recipe. And not just success from a business perspective, like you mentioned, Lemmy, actual customer success or customer happiness as we talk about it. It's a shared goal and vision by the shareholders and all the stakeholders, I think, in the business that at the end of the day, whatever we do or try to offer as IO, where insurance is concerned, benefits the ultimate user, who in most cases is a mobile phone customer and also eventually becoming an insurance customer. Thank you. If you don't mind, I'll stand. Thank you. Just to get closer to the screen. The body looks young, but it's old. Okay. Thank you. All right, so I'd already started explaining, obviously, what we are or who we are. So IO came to fruition, I think, around 6 or 7 years ago now. Like I mentioned, we are a joint venture between the MTN mobile network operator, as well as now the Sanlam group of companies in a 50-50 arrangement. In Zambia particularly, we are a subsidiary of the baby of that JV, which is IO Holdings out of South Africa. And from a licensing and operative perspective, we are currently collaborating with Sanlam with regards the underwriting side of the business, as well as MTN and MTN Mobile Money in terms of leveraging off of their telco distribution platform. From a licensing tier perspective, who are we in Zambia as IO? We are licensed as brokers, but commonly referred to as intermediaries or fintechs in some jurisdictions. We started our operations in Uganda, and then shortly after that, Ghana. Zambia was third to market in 2020. We now have Cote d'Ivoire, and I think Cameroon. Yeah, Cameroon went live last week. So there is a rapid expansion for the simple goal of obviously making insurance available to as many Africans as possible through the technology that the mobile network operating platform of MTN potentially offers. In Zambia, to be specific, we have enrolled around 3 million customers since 2020. We're currently sitting at around 1.5 to 2 million active who are basically acquiring and purchasing many life and hospital cover on a daily basis. I'll share with you, obviously, from a product perspective, what that is all about. I know the slide says we are fully digital, but probably not in truest sense. We do have a balance between people and technology, as you can see from the pictures there. Our core distribution, obviously, is three-pronged, unassisted, where customers basically enroll through their mobile phones by dialing a simple short code, *296# in Zambia, which will then bring up the product information, the enrollment process, and obviously any other detail the customer may require. We also have assisted channels. We have a call center or telesales distribution center, which basically leverages off of data analytics. I'll explain that a little bit more, but by nature of the partnership again with MTN or the ownership of MTN, we are privileged to have access to leads provided to us by the telco company, obviously within privacy laws that exist in our jurisdiction at least. So basically what we do is that we try to engage in the field with people, try to get an understanding of who they are, and then through that understanding, we try to build some kind of customer persona or customer profile, age, gender, airtime usage, mobile money usage, you name it. And then, of course, we give that persona or profile to the telco to try and draw as many leads that they can. And then when we get those leads, we basically call these customers, educate them about insurance, and then also about our product and offering and the value that it may bring to their lives. We also have human face-to-face, again, leveraging off of the telco distribution capabilities. I've seen it also similarly in this market in Kenya, where you have agents helping customers with their SIM cards, registration, onboarding, M-Pesa, you name it. So it's a similar proposition across our markets as well for IO, where we try to upskill some of these field champions with regards to insurance. And obviously, as they engage with their public, they also offer the insurance proposition accordingly and assist customers learn more about our products and the value of insurance, as well as sign up as well. The next is basically a video which will probably give you a little bit more indication of what we are actually trying to strive to achieve. This is Ghana. I picked this video particularly because the one from Zambia is in a local language. This one is in English, so I'm sure we'll be able to grasp a thing or two. So if the technical team can just proceed to play, if it's an embedded video, so. Sorry. I can do it for me. Oh. Not so digital after all, my apologies. I'm still catching up with the technology. Yeah, so as I was saying, we try as much as possible to leverage off of the capabilities of the telco companies in country where we are obviously operating under the MTN, where MTN obviously is operating. It does have its advantages by way of, like I already started to mention, already established distribution. Okay, yes, okay. Please proceed to play if ready. Doesn't seem to be sound. I'll try and speak to it as it goes. So what you're seeing is a gentleman basically making a comparison of cost of insurance compared to what people basically spend their money on daily. And what's missing, obviously, is that at that same price, they can also get hospital cover or cover that actually takes care of their hospitalization when they're admitted in hospital for only 2 Ghana cedis.
And your registered family members.
Or maybe you can start it again. Sorry, yeah, just so that everybody can appreciate the.
Of 2 Ghana cedis. 2 Ghana cedis. Two Ghana cedis can get you a coconut, or even 2 eggs. 2 Ghana cedis can also get you 10 sachets of water, like right here. I'm sure you can do a whole lot more with 2 Ghana cedis. But can 2 Ghana cedis take care of every night at the hospital on admission, or even support your family funeral expenses? Shh! Don't say no yet.
With IO Insurance, 2 Ghana cedis will give you cover that pays for every night spent at the hospital on admission, or secure a lump sum to support you and your registered family members' funeral expenses when the unfortunate happens. It is time you know about the goodness Ayo brings to many families in Ghana. Simply dial *296# on your MTN phone and follow the prompts to register for Ayo Recharge with Care today. Ayo, because you care.
Okay, thank you very much. We can move to the next slide. So what I want to do is just try to provide, oh, sorry, I'm doing it myself here. Provide some context to what we saw. So I tried to unpack that short video, obviously, to provide greater context. So what did we see first there? We obviously saw a need, right? As you could see, the gentleman there was saying 2 Ghana cedis can get you some eggs, can get you some sachets of water, and as well as a drink, if you like, as an example. And in that context, it identifies that it also at that low price, which I think 2 Ghana cedis is probably maybe 20 US dollar cents or something like that. Help me with the conversion if I'm wrong. But the need obviously is that people require health services or some kind of safety net or protection, like the good doc mentioned, in terms of calamities that happen. And for that, 2 Ghanaian cedis, you can actually afford to get cover that takes care of you when you spend a night in hospital. In essence, what we are trying to do as I obviously here is identify clear and present customer needs and obviously anxieties and risks that they suffer. We try not to guess, but ask the customers and obviously grow from there. What's the next thing that came out there? I think we saw that cost, obviously, like I mentioned already. So only 2 Ghana cedis, basically, from a customer value proposition, is something that is worth investing in. And at the price that you would buy a bottle of Fanta or anything else at that low level. The customer themselves are gaining and not losing. Simplicity, obviously, is the how, or the way that the cover is acquired, or how the customer actually gets to access this insurance. So we basically try to adopt a customer-driven, trigger-based behavior, if you like. What do I mean by trigger-based? So for this particular product, it's linked to the actual usage of one's airtime or credit, depending on what you call it, where you come from. So we know for a fact that if you have a phone, you obviously buy either data bundles, airtime credit, maybe if you have mobile money in your market, you use it to send money. So we try to embed insurance that is linked to that behavior to make it a little bit more acceptable and understandable. So I think that's also one of the areas where we've had, I think, significant success in our model, because it's something that the customer is familiar with in terms of their daily lives. It's nothing new. All we're doing is adding information about insurance to the basic usage of their mobile phone. So for us, it's simply by dialing *296# hash, and then of course a menu comes up where you're given information about the product, as well as how to enroll, and most importantly, you're able to see your insurance cover balance grow and or depreciate depending on how often you send money to your auntie in the village or how often you top up airtime in your phone. Also very important, of course, again, Lemmy, you asked what has worked. Again, speaking to the partners or the partnerships like Jerick had mentioned too, I think it's been very beneficial to have a big brand like a telco, obviously, supporting your distribution and obviously being attached to an insurance product. It does have its downside though, because when something goes wrong with that brand itself, you as an insurance partner are equally affected. I'll give an example. I think just about a few days ago, Ayo in Zambia got blasted on social media by a customer who unfortunately was informed by an MTN customer service agent that the deduction going through their mobile money was actually an Ayo deduction, when in actual fact it was another telco product whatsoever. So that's the downside to obviously the integration or embedding. But from a brand and acceptance perspective, we know without a doubt that the customers, when they see the MTN or the big telco partnership established, they'll have a level of trust because they know their phone will always work at least 95, 99% of the time. And as a result, for that entity to be partnering with us as an insurer or intermediary, there is a level of immediate trust gained there. And also on the slide, and I think what matters most is obviously that, as you can see, that testimonial speaks to one of our customers who actually made a claim, and obviously we fulfilled the promise right through their phone. No physical interaction. They didn't have to look for a branch or an agent for them to lodge their claim. Everything was done simply via USSD and digitally, right down from the enrollment up to the claim itself. The document submission, everything was done via the customer's phone, and obviously the claim was paid within 24 hours of receipt. What next? So the customer value proposition, obviously from an IO perspective, involves going on a journey with our customers. So a lot of the people, like I mentioned, around 2-3 million that we've been engaging with, people that have experienced or are experiencing insurance for the first time. So what does that mean? It obviously means that the product we are potentially selling to them or providing a service to them for is their first interaction with insurance. So typically, like I said, we have begun with a simple life and now also evolving to device. Why device? Because we distribute our product via the phone, and we know the value that the phone has to most people. I think everyone in here has a phone. I did a little exercise last year, so if I may also potentially do that here. If I may ask all of you to be upstanding just for a minute, just for a little exercise. All right. Okay, so can anyone without a mobile phone sit down in this room right now? Okay. Well, the technical guys are working, so I guess they don't count in the back. Okay, all right. Next one, okay. Can anyone with just one SIM card, not multiple, but just one SIM card or one network, please take your seats. Okay, all right. That's more than I thought. Kenya's a different market. Yeah. Okay, all right. So the next one, okay. Can anyone with their mobile phone off right now take your seat? Okay, so case in point, please you can all be seated. Case in point, you all have the mobile phone on you, and it's all of you have it on right now, and all of you are immediately contactable and reachable. Am I wrong? Yeah. In fact, yeah. Oh, that's mine, I think. No, just kidding. No, but yeah. So it gives the case of obviously the significance and the importance of the mobile phone as a device for actually reaching people and reaching a lot of people. I'm sure we've been hearing about this for a very long time now. The reason why I asked the aspect of multiple SIMs is obviously in Zambia, we have, I think, 3 major networks, and literally everybody has all 3. You would have, in the past, you would actually have 3 devices. Now you can dual SIM and the like. But what that means is that people want to stay connected. It's a risk measure. They literally don't even trust the one network company. Say, oh, if this one is off, I'll need to be contactable. So what we're seeing is that there's an empathy or attachment, sometimes even of sentimentality, to this kind of technology that I think offers an opportunity for us in the financial services sector to get closer to people, especially those that typically do not have access to the likes of insurance. So the device obviously is now one of the propositions we're offering a cover for, and obviously it benefits us because we distribute through the mobile device. We're also looking at other avenues in terms of product. It could be property, it could be actually wealth building going forward, and generally creating an entire ecosystem that is embedded in the telco financial services of mobile money, that offers insurance and takes care of every, and if possible, most, if not possible, most of the risks that people on this continent are going through. There's a little quote in the Bible there to say, we try not to stress on reinventing the wheel of a car. We just try to put fresh air into it every now and again. So what does that mean? We're not looking to reinvent insurance, inclusive insurance, or anything like that. We're just trying to breathe new life into it every now and again. So people will have their policies, they'll have their life cover, they'll have their device cover, but we're continually trying to see what else is it that we can actually provide that will be of value in terms of supporting people and mitigating the risks that they experience day to day. Okay. I think that's the end of me. Thank you very much, everybody.
Great. Thank you very much, Andrew. A very interesting model where the telco co-owns the solution or the business together with the tech company, and you have a very good relationship also with the underwriters. I think a lot we have to learn from that, and the very reason why we need to interact with you a bit more. Thank you. I would like to just make an announcement that because we started a bit late, if you could indulge us for just about 10 minutes extra. We eat 10 minutes of your tea break so that we can finish at around 10 minutes after 11, just so that we can be able to wrap this up. I hope I have your indulgence. Thank you. So, Dr. Kuria, one more question to you. Because you have, from the business that you were running and you are currently chairing as Group CEO, did you achieve a business case? Were you able to achieve, a satisfactory business case? And when you did that, what was the value to the customer? If that did happen, you were able to balance business case and the client value. How did you manage to do that? And around how long did it take you? I know there are multiple questions, but all asking, if you were able to make a business out of it, how did you get to that?
Well, I would say that we were still in the journey, and we hadn't even reached anywhere near, even having a break even. And I think in one of the products that was quite successful, that was a bundled product, we actually did it with you, the Bima ya Jamii. And we had a tripartite kind of arrangement with the largest women finance, microfinance company in Kenya, the National Hospital Insurance Fund, and ourselves as the insurers. And what we did, the primary project was the micro health product. And given what Jerick talked about, the success that comes with the bundling, because of the nature of the market that you are dealing with. You are dealing with people with scarce resources. They don't have the wherewithal to spread out, their little money into different products. So the issue of bundling becomes a very strategic, critical success factor. So we realized that early enough, and we decided to bring in a personal accident to that, and also a funeral cover. The reason being, like I said, we need to understand the micro or the so-called economy market. That because of lack of exposure and because of that scarcity of resources, they are very sensitive about their spending, and you can understand why. So if you can be able to deliver more value with the same coin, so be it. So we had first of all to go through a piloting, and that goes to the whole essence of what Jerick talked about, learning and unlearning. And I want to say that in microinsurance, if you think education is expensive, you try ignorance, because it's going to be a disaster. So the issue of learning from failure and doing better the next time. So we start with micro health, then we realize that it will not work properly alone. We go to bundling it together with the personal accident and the funeral. That nearly takes you to the end of the second year. And at the same time, you are also taking through the other partners in terms of educating them about insurance. Because the problem with the other partners is that they are not insurers. And there is a way they do their business. They have their own culture in terms of their business. We have our own culture, so we have to align this. By the time you socialize them to, the cooperative way, the insurance way of doing things, it has really taken time. So inclusive insurance, and actually insurance in general, is a long-term business. And I think that is what we need to internalize. That this is not a business where you rush to make quick money. And the moment you have that mindset, it aligns you to the way insurance needs to be done. That you don't rush to this business because you hear there is a potential and you think there will be a lot of money, and profit to be made. So what I can say is that even by the time, unfortunately, we had to discontinue that product because our main partner, NHIF, were not very comfortable. They thought we were eating their lunch in terms of competition. And this is where the issue of also having an abundant mentality, that microinsurance business will be done through a multiplicity of stakeholders. And to bring these stakeholders together, align their thinking in terms of the mission and the objectives, it takes time. And therefore, we have to get to internalize this fact that it takes time even to negotiate, even to educate your partners to the extent that ultimately you become aligned. And therefore, the issue of how long it takes, I can tell you, even by the time I left CIC, we had not managed to come to a break-even. One of the critical issues that was talked about by Jerick is the issue of the customer value proposition, the issue of claims. And for us, we also had to educate our clients how to claim fast. Even as we were marketing the policy, we educate them how to claim fast so that you start disabusing them of the notion that insurance is just there to take their premium and looking for every trick on earth not to pay claims when they fall due. So one thing that I want to emphasize here is that long-term perspective of doing microinsurance. By the time we were discontinuing Bima ya Jamii, there were still some claims that were outstanding. We decided that we had to pay those claims to save the market from the bad publicity, even our own institution. But we were also acting in the greater good of the whole market, that we don't undermine the little trust that is being established. We need to guard this jealously. The moment you make one step in terms of increasing the trust of those customers in the bottom of the pyramid, because one, they are very suspicious about insurance because of the cultural aspects and the way we say that insurers, they are quick to take your money and very hard to pay claims. So how do you disabuse them of that notion if you are also the first one to decline their claim because the business was not profitable? So we decided to take the hit in terms of absorbing those losses for future business. And I think this is where we also have to learn that mindset of the long perspective aspect of microinsurance. Like he said, you know, you go on every step after learning from failure, you do better the next time. So you are improving in terms of, you know, your efficiency, your even the return in the future on an incremental basis. So it doesn't come poor. It is something that goes on incrementally. And therefore, that incremental progression, of course, will get to a point where it has been properly scaled up to get to a tipping point. And the critical thing is now to work towards that progressive incremental improvement that will lead to that tipping point. So I can say that I would be telling a lie if I told you that we even made a break even in the products that, but of course I had a lot of confidence that in the future it was going to work well and it was going to improve. And I think that is the kind of a mindset that one has to have in the development of microinsurance. Be ready to absorb the losses for a certain time until you build that scaling up and that will get to a critical mass after the tipping point.
Thank you. Thank you. That is brutal honesty, what we need in business. If we didn't make it, we didn't make it, but we saw where we were going. And I think that is what informs then the next step you're going to take. Like Albert Einstein said, that every time he failed, he did not fail. He just learned how not to do it next time and tried a new thing. And eventually, we know what we have achieved from his works. So even with your efforts, we know the market has not failed. We are learning, and a lot of us, even in Kenya and in Africa, are picking up and are learning from what CIC started off. And I know that there are a number here who already have reached that tipping point. They're already making a profit, and we are ready to hear from that, just to get to know how did you build up from those who went on ahead of you. And thank you for being a pioneer. Great. I think we're going to hand over to Hadil now. Hadil is coming to us virtually as well, so that in the next few minutes we will be wrapping up. So technical team, please get us Hadil on the screen. And Hadil, be ready to have your presentation with you, because we will not be projecting it from our side.
Hi, good morning to all. I hope you can hear me well.
Yes, Adil, we can hear you well. Welcome.
Thank you. So thank you very much for inviting me, and I apologize for not being able to be physically present in the conference, with the hope that next time, inshallah, I'll be there. Just being conscious of the time, I'll take a quick overview of what we've been learning at AXA since we started the inclusive insurance journey 7 years ago. First of all, it's really, and just to complement the points that my panelists mentioned, it's very important when we talk about inclusive insurance that we build the capacity of the insurance company. It's very difficult to say that we will start doing it tomorrow. We need to ensure that every functional area inside the company understands what it is about. It's very also important that the top management in particular gets very good learning and understanding of what are the requirements of inclusive insurance, and also to pay field visits to the customers. Without being in the field, it's very difficult to say that we understand what does it take to do microinsurance. So it's very, very crucial and important to be in the field most of the time, and not only the staff who are working on microinsurance, but also all functional areas of the company. It changes a lot the mindset of the institution itself. The second phase of growth would be more in the engagement in developing not only insurance benefits, but risk management solution at large. Understanding what are the customer risks and how they face them, and what are the natural coping mechanisms that they deploy. And then tailoring an risk management solution rather than an insurance benefit. And I'll come to this point a little bit later in the slides. And last but not least, and as my distinguished panelists highlighted, it's very important to embed in the overall strategy of the insurance company a clear objective and goal to reach out to the low-income segments and create the proper solutions. Without having this in the overall strategy, it's very difficult to monitor it or even look at its growth over years. And of course, creating a separate P&L is extremely crucial because as mentioned by my colleagues as well, it reflects how viable this line of business is, where are the high cost elements and how to reduce them, and also where to capitalize to increase the revenue and accordingly achieve the break even at the appointed time. Also, what helped a lot in the growth of AXA business in Egypt in particular are two key elements. The first one is the supporting infrastructure. So over the past 4 to 5 years, there have been a lot of development in the digital payments in Egypt. Also, a lot of development in the administration systems of insurance at large. InsurTechs have developed a lot. We have a strong wave of data analytics companies that are rising in Egypt. There have been training programs on inclusive insurance and certification programs, and also a lot of capacity development for the technical functional areas like actuarial expertise, for example, in pricing microinsurance products. This is, of course, complemented with the enabling environment. So the regulatory authority in Egypt supported the growth of microinsurance through a list of decrees or directives that have been issued over the past years to support the innovative distribution of microinsurance, to avail less, I would say, less stringent conditions for the offering of microinsurance. And we expect very soon as well a new law in Egypt that would endorse the growth of microinsurance at large. Going through some of the key lessons and also to complement what has been said in the session since the early morning, top management vision to see the opportunity is very crucial. If the top management does not see the opportunity in inclusive insurance, it does not work, and it doesn't come as a charity or a corporate responsibility part of the business. Inclusive insurance is a journey. There is always constant effort to explore opportunities, and we have to have an innovative mindset. We need always to think out of the box, see what can be done rather than what cannot be done because of our past experiences with conventional insurance. Insurance companies tend to become product driven because we are more comfortable in doing what we know. It's very important to stay cautious, that we need to stay customer driven and follow the evolution of the customer needs. We need to challenge always what we claim to know about the customers. It's very important to stay in the field quite often, listen to the customer and monitor how they evolve. And they evolve quite fast over the coming of these years, particularly with the development on the technological side. We always work with trade-offs between the cost of the insurance and the benefits of the insurance. This compromise will have to be balanced here and there so that we can achieve scale, we can offer new solutions, and at the same time maintain the proper financial performance of the products. Digitalization is not necessarily about the product design or the delivery. I would rather emphasize that digitalizing the processes inside the insurance company and also leveraging heavily on data analytics to understand the customer behavior. This would help a lot in the future in driving down the cost of insurance. So when we think digital, it's not only about how we offer insurance to our customers, like digital payments or digital enrollment, but also we need to think about our internal processes and systems. And last but not least, we need to think about the risk management solution, as I mentioned earlier. And in this respect, just to give an example, most of the customers usually, when it comes to healthcare, for example, it's not only about the cost of health that is covered by insurance, but also about the quality of healthcare. So one of the things we're leveraging on in AXA Egypt is to offer, along with insurance, some sort of primary health care that will help the customer in identifying what type of health issues they're facing, because the quality of healthcare for the low income segments is usually not the best. And also they need to feel respected, which is one of the things that I always highlight with my colleagues, is that how we treat the customers when it comes to healthcare offering is really important as well. Not only the quality of the diagnosis, but also how the physicians treat the customers as well. Two of the things that we tested in the field with our insurance products were having a doctor on site, usually within the premises of the partner organizations, for primary healthcare consultation. And also during the COVID pandemic, we had the opportunity to test teleconsultation as well, and it gave very positive results with our customers. Moving forward, there is a strong inclination to work on primary healthcare, both digitally and physically in clinics. And also, we will be testing very soon the enrollment of our customers in chronic disease management programs, particularly for diabetes. It's one of the crucial needs, and we will have the opportunity to test it this year, inshallah. I'm sorry, I tried to be as quick as possible, being conscious of time, and happy to take any questions. Thank you.
Great. Thank you very much, Hadil, and thank you for being conscious of time. We have just 2 minutes. And what I would ask is that if we have any questions, perhaps we can take 1 or 2, which we can address when we get back. And Hadil, if we get questions for you and you're not with us in the next session, we will be sure to pass the questions over to you.
Thank you.
Any questions? Yes. Catherine here. Another question somewhere? Okay.
Hi. May I? Let me. Is it working? Yeah? Hi, it's a question for Andrew. And I'm really struck by your success in doubling the number of consumers. I mean, that's really amazing. But sitting here in Kenya and having monitored the market for a number of years, I think many of us will be aware that the bundling of insurance with MNOs hasn't always known success. So what is it that AO is doing that is different? Obviously, it's not a freemium, but what would you see as the differentiating factor that, because I'm sure you've looked at these examples, right, as lessons learned. So how are you ensuring, if you like, that the same kind of implosion, which I think happened in Zambia as well, right, wasn't just here in Kenya, won't happen again with your business model?
Thanks for that question. So it's one of two things. I think the first thing that I believe we are fortunate to have had success with, obviously, is the nature of engagement. So if you recall or you heard earlier, I made mention that we try to leverage as much as possible over some kind of what is called trigger behavior. So obviously, we engage through the mobile network operator offerings, in this case, airtime. So what we have done is basically linked that airtime purchase and airtime engagement behavior with insurance. Very simple example. A customer, through engagement with us, which is either via, like I mentioned, our telesales, where our telesales agents call customers and educate them about the product and the offering, and or themselves go to their phone and dial the short code and get information, are able to have insurance at their fingertips. So it's kind of top of mind. The same way you would check your airtime or data balance on your phone, you can also see your actual accumulated insurance cover cash in real time there and then. Typically, conventionally, and I'm sure there are a lot of experienced insurers here will all agree with me that one of the biggest gaps in customer engagement and in some cases retention is that insurance is not top of mind. Why is it not top of mind? I'll fill in the form today. I'll have the deduction start through my bank account or my payroll, but I really will not know how much insurance I am covered for, especially where life is concerned. With what we are doing, and I think what has helped is basically the real-time visibility of your insurance balance. So it's almost like a mini insurance wallet, if you like, that the customer sees fluctuating, either going up or coming down, depending on how they continue with their behavior of either purchasing airtime and or transferring money, if you like, via mobile money, etc. So I think that's the key differentiation. In terms of the actual scale itself, in terms of how we've managed to actually get to those numbers, I think it's a no-brainer. Like I mentioned, we leverage quite a lot off of the existing distribution channels of the MNO especially. Previously, what failed was obviously, I think the quality in terms of engagement, and also, I also like to believe somewhat of borders between the partnerships, if you like. So in Zambia, the experience that was there with regards to a similar model was obviously that the telco company would stop at a certain point, and then the insurer would pick up at another point, and then there was an intermediary there who also had their bit to do. I think what we have managed to do now through IO is basically put everything in one basket. So IO is basically the telco, the insurer, and intermediary, for lack of a better phrase, in one. In terms of actual even people and expertise, we don't just have insurance practitioners in IO, we actually have telco executives operating in IO. So it gives a whole mix in terms of engagement and how to leverage off of the market that we're engaging in.
Okay. On that note, I think we can break for tea and coffee, and then we'll be back in 20 minutes. And if you have any questions for Andrew, Jerick, Dr. Kuria, please still feel free to ask. Dr. Kuria won't be with us, but of course we can always pass on the question. If Adil and Jerick will be around, we can also get them engaged as well. So I'll see you in 20 minutes. Thank you.
Okay, please, let's have our tea outside here.
Drown
Welcome.
out the noise.
Tea,
Listen
this
to
side.
the sound
You can
of
use
my
this
voice.
side for tea. We are behind our program. Kindly, let's make it in 20 minutes' time. Thank you.
boss himself.
Have you been?
I've been good. What about you? Last I saw you was in Nanyuki.
The last, I think it was on the...
Were you not in Nanyuki at the...
No. It was the event for Marvin Mentorship.
Marvin. Okay, that's right. Yes,
The sales event.
Yes.
Fixture. Yeah. That's it. That's perfect.
So we're going to talk about background of inclusive insurance and know that, yes, what to think about inclusive insurance, why this conference is important, as well as what you guys are doing in terms of inclusive insurance. I know that you won the microfinance. What's next for you?
Yeah, I mean, yes.
Is the mic on?
Yes, the mic is on, so we can start?
We can start.
Okay.
Introduce me.
Thank you so much, Ashak, for this opportunity. We're here to talk about inclusive insurance, Eastern and Southern regions. What is your take on that? How far are we in terms of inclusive insurance as a region?
We're not really very far from inclusive insurance. It's just that we are looking at
welcome back. Okay. Perhaps I stand. Welcome back. We continue learning from practitioners, and this time we have a new set of panelists. Again, people that have been acquainted to, some new, some for a long time, like Ashok, Zufan, and now Charlotte and Saurabh. So thank you so much for being available to this panel and share your insights in terms of how you can make inclusive insurance work. So as a way of introduction, Ashok, I think, doesn't need an introduction in Kenya. Yeah, he's a well-known group CEO of Apollo Enterprises, and also extensive experience in terms of inclusive insurance. A while back, I was interviewing Ashok to learn how he got started. It's a story that I can't tell today, but very interesting story how he got into the insurance sector. Saurabh, and I'm not doing it because of ladies first. I was taught because of gender, never do ladies first. Okay, then Saurabh heads up microinsurance business of Britain. And just not long ago, he posted something on LinkedIn, which was like, wow, okay, hitting that target, and we want to learn more about it. I've known him for a while as well. Initially, he was with the ILO, and then now he moved in this space and doing great things. So pleasure and honor to have you on the panel. Zufan, we met a while back in Manila, when both of us actually were hosted by Bert from Microinsurance Master and Lorenzo and Jerick, Pioneer Insurance. We learned everything that Jerick was talking about. We learned it with Zufan, with another team, and since then we've stayed connected. And not long ago, I asked her what she's doing in the inclusive insurance, and hence looking forward to your presentation today. But she told me she has Charlotte, and Doug actually said they get to present together all the time. So Charlotte is her partner in inclusive insurance space, and you get to see them present of what they are doing in the inclusive insurance space. So without much ado, I'll get started with Ashok.
Okay. All right.
Please, can you put Ashok's presentation?
Okay. Good morning, everyone. I think for those who have come from outside Kenya, welcome to Nairobi, and we hope you're enjoying our weather. It's our rainy season, so you'll find rain coming all the time. But I'm just trying to see now. Okay. Not very good with this. All right, there we are. Okay, basically what we have is that at APA Apollo, we looked at microinsurance, and we are looking at it in a very different way and trying to grow it. In Moses' career, basically earlier on, my colleague Korea talked about what we should be doing in insurance, and it's all about persistency and pension. And we're looking at how we can actually drive this area of closing the protection gap. Now, we are in Kenya, Uganda, Tanzania. Tanzania, we have an associate, and in Kenya, we are fairly widespread. And our vision is to be one of the things that about our vision is we would like to be ensuring happiness. And we'd like to make sure that whoever we deal with and how we deliver our products, deliver our solutions, and get results is that we will leave behind happiness behind. So that's something that we would like to do, and that's why we have this big smiley. The important thing is that when you look at inclusive insurance, for us, is that where should we play, how should we play? But inclusive insurance is something that is very, very important for us to increase the penetration. I think from most of us present here, we will know that Kenya's penetration of insurance is about 2.7%. Our neighbors, Kenya, Uganda, Tanzania, are much lower. And if you look at other countries, there's some of you come from Zambia, Malawi, you'll find that it's even lower there. But what it is we see inclusive insurance to us has got two areas that we look at. One is that we can increase penetration of insurance, but that is not that important. What is important to us is what solutions can we take to the masses which will benefit them? Because the masses are the ones that can benefit from insurance but are not aware of insurance. So we have to really look at how we can expand and close the protection gap. We started we started in microinsurance back in 2006 in different ways, and the first start was we are actually in agriculture insurance. We started piloting weather insurance, looking at how we could take insurance covers to the farmers. And today we have the largest insurance penetration amongst smallholder farmers. We have got about 1.4 million farmers that we are insuring. But there are two types of partnerships that we have. The first partnership that we have is that we have got 7 insurance companies which got together. And we are very fortunate that these 7 companies had actually had the conviction that we could do something together as an insurance company while we are competitors in other areas. In agriculture insurance for smallholders and livestock insurance, we will become partners. So 7 of us have got together under Kenya Agriculture Insurance Group, and these 7 companies have virtually an equal share. And what we have done is that with this basically partnership, we are able to make sure that we were able to go to reinsurers and say that as a Kenyan industry, we would be able to take 20% of the risk, which changed the equation, because before when we went to a reinsurer, they would not